Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and today we're talking about this crazy interview with Jeremy Siegel, very well-respected economist, talking about that Jerome Powell should have to apologize for what he's doing to the American economy, and whether or not Jay Powell's going to make us all live in homeless encampments next year.
All right, let's get started. Two Super Guys Trade Stocks.
Just FYI, I call the tent on the right. It's. I think it's a little bit nicer.
It is definitely a little bit nicer. I'm not
Yeah.
familiar with this Siegel guy.
Yeah.
I don't know
So
who he is.
Jeremy Siegel, he's often appears on CNBC. He's a very well respected kind of academic in terms of economics and finance, that sort of thing. He's a professor at the Wharton School of Business, which is one of the preeminent kind of schools as far as like business goes. So he's certainly someone that has credence, and his opinion should be listened to. However, I think he's being a little off base here, a little by a lot, and the kind of major criticism about him, Jay Powell talking too tough, I think is actually completely intentional and is exactly what Jay Powell needs to be doing in order to not have to hurt the economy as much. And I think that's what we're going to talk about.
Yeah, I don't like how he's saying that, honestly, you should apologize for such poor monetary policy. I don't really get what should they be doing. They're hiking 3 points of a percentage point. Should they be like, hey, we're really sorry about it? It's necessary. We created 40% of the entire money supply on the planet like in the last 2 years. So
Yeah, so it really seems that he wants them to pause more often. It is really what I think his position is that he doesn't want them to continue raising rates until they can see what the rates, kind of rate increases they've already done will have in terms of effect. That he's wants it to kind of be a little bit more careful, slow, kind of monetary tightening policy rather than what they're doing very aggressively right now.
we
Fastest in history, right? Don't
CPI
forget.
is at like 8% or whatever. How slow does he want to go? This is
Well,
ridiculous.
yes. That's exactly what Jay Powell's been talking about. If you really watch his kind of Jackson Hole speech, that was a major point of his, is that he needs to be aggressive, he needs to talk tough, and he needs to make sure that it doesn't stay around for any longer than it absolutely has to. And, hurting the economy is potentially something that could happen, and that's very much on target. So this is like the Jeremy Siegel gentleman, and like I said, he appeared on CNBC. It's a pretty short interview. It's worth watching. It's only 4 or 5 minutes. Like I said, he is a very well-respected guy, so this isn't like entirely off base in terms of his characteristics or his kind of experience. But I think I disagree. I'm a stupid guy on YouTube disagrees with preeminent economists. So, by all means, my opinion really matters. But like this is the statement that was really kind of like I was like, what? And, like this is the headline of the statement, of course, that he owes the American people an apology for such poor monetary policy that he's pursued and the Fed has pursued over the past few years. This is a complete juxtaposition to what other people have said about what Chairman Powell did, and he forestalled and kind of kept us from going into a massive recession at the same time we were dealing with a global pandemic. Otherwise, we've been doing this two things at once, which would have been far more challenging to deal with.
It would have been way worse. And I don't like how he's saying that it may cause a recession, right? So, okay, so the Dow, for instance, had a crazy year, 2020, right? If we were to go up 30% every year for like 20 years, the Dow would be at like a million, wouldn't be at 30,000, right? That's a ridiculous thing to say. The economy can grow and then it needs to shrink a little bit before it grows more. It's just like an ABCD pattern in stocks. When you go up, you got to have a healthy little bit come down and then you go back up again. You can't just constantly grow forever. It's not how it works. Some recessions are healthy. I know it's not comfortable, but it's healthy.
Exactly. Yeah, and it's really during these dark economic times where you have the most opportunity to really deploy your capital effectively. It's nice to see prices come down on stocks that I want to own, or like property that looks like worth maybe actually buying now. Not quite there, but like headed the right direction finally, which is nice.
Yeah.
Um,
I think this guy's
this
long the SPY. I think that's why.
maybe. I mean, over long run, you should be right. This is in complete contrast to Warren Buffett's comments about what Jay Powell did during the entire pandemic. When Warren Buffett was talking at the most recent Berkshire Hathaway annual meeting, was asked about Jay Powell and what he did with the kind of economic collapse there, and he said he is a hero, complete and utter like contrast to offer an apology versus being called a hero for the same exact action by two very well respected people, which is kind of funny how the world works like that.
Yeah, if you're on Team Buffett here, give us a like and subscribe. I'm Team Buffett all day, so I don't care about this other guy anymore. It's just a ridiculous thing to say, in my opinion.
Yeah, I agree. I think we definitely need kind of a little bit of a step back here. Now, one of his criticism was that the Fed was talking too tough. And if you watch Jerome Powell's Jackson Hole speech, he basically said that he needs to talk tough because the expectation of inflation can feed upon of itself. All right. This is one of those you have nothing to fear but fear itself kind of sort of deals. So just the mere idea that inflation could exist can cause inflation. That is why he's being so aggressive in what he's trying to say in order to kind of temper down any expectations of inflation, therefore hopefully mitigating him having to be even more aggressive in terms of his actual actions.
Vinny actually did a video on this in the past. He showing essentially a survey of consumers. If they thought inflation was coming before it actually happened, they would change how they were spending. So talking tough can mitigate that. That's the whole point. So
exactly. I will say that, Chairman Powell's kind of interpretation of the jobs data, which is what this JOLTS data is talking about, has been a little ambiguous, if you will. Now, we're still looking at a jobs market right now where there's two kind of open positions for every available worker in the workforce currently looking for position. However, you start to see some early indications that the job market may be returning to a little more normalized phase, where we're seeing that the number of quits are down, which was one of the ones he talked about a little bit, how people aren't just up and giving up their job for no reason whatsoever and walking off hoping they can find a better opportunity, which is an early sign that we may be headed the right direction, but we're still far off from where we should be, and that can really can be supporting this continued inflationary environment.
Right. No, agreed.
Yeah. So obviously supply chains played a role in this, but I don't think people realize how much of it was really demand mediated still. It's still, even to this day, I talk about it when I go out to stores, if I'm spending 40 minutes in line trying to check out a TJ Maxx for my wife, what the hell? That tells you how much money there is still floating around the economy. You haven't seen consumer behavior really reacting to this yet. There's still a lot of cash out there, right?
Yeah.
Maybe credit cards. Maybe credit card debts hitting all-time highs, but people are still haven't changed their behavior yet.
Yeah.
And that's in the face of the fact that we've seen commodities come down significantly, which was making this that much worse in the beginning half of the year.
Yeah, this is where that Affirm short seems interesting, right? Because more and more credit card debt's happening. More and more people are putting stuff on credit cards and using Affirm to buy stuff. Oof.
Yeah, agreed. I don't know if you want to move me here, but the one point I want to make with this is that inflation was excessive monetary accommodation for the last couple of years. So this is one where we actually agree, this last little segment here, talking about how the reason why this inflation occurred is really because there was just so much money in the economy. I completely agree with him on that. That is exactly why it happened. That, wages are playing a part of this, but it's, the supply chain is also playing a part of this. But really, it was just the oversupply of easy, cheap money that really drove this inflationary cycle.
Yeah, I don't understand what he would do different. I don't, are you just going to let, CPI index chill at 9% for 5 years? What's your goal here? You have to talk tough. There's no other way to do this. You have to raise rates. There's no other way to do this.
Yeah, I don't think he's taking umbrage with the raising rates. It's just the pace of raising rates. Because, like I said, when you look at the charts, I probably should have put that in here, but we're literally increasing at the fastest rate in history. The line for rates is almost vertical, and all the other ones are kind of slightly, diagonal like this. So, I get that. But the Powell's point is that if he actually waits and does this slowly and kind of in stepwise fashion, that he's probably going to have to achieve a much higher terminal rate in order to finally get it under control. And it's going to take 2-3 years rather than a year,
Yeah, I'd rather just have a bad year to get this over with, to be honest.
Yeah, likewise.
All right, guys.
Let us know what you guys think.
Give us a like and subscribe if you're on Buffett's team. Have a good one.
Yeah, maybe in the next one.